What's going on, guys? Today we'll be looking at this call option chain we have here. We'll be looking at specifically strike price, bid ask, last price, expiration date, and volume. We'll talk about the rest of the parts of the option chain in the next few videos. But let's get right into it. So you guys will just have to, you'll see pop up on the screen. First we'll be talking about the strike price. Strike price is right here. So as you can see, all of the parts of the option chain are labeled right at the top, right up here. You can see, so you'll never have to guess which is which. But the current price of this stock is $279. So you can see right at the money, it's a little bit expensive. So as you can see with the call option chain, as you go up, it gets cheaper. So you can buy whatever you can afford, but it's always important that you assess probability, because you don't want to buy a $50 contract way out the money unless the stock is actually going to move and make you some profit. Don't just buy it because you can. So next we'll be talking about probably the most important thing on the option chain that you make sure you know is the expiration date. So this is the Webull platform. It tells you how many days you have until expiration. Remember, the closer you get to expiration, the more likely your contracts are to become worthless unless they are in the money, which is below the stock price if you're buying calls. And it tells you the actual expiration date, which right here is October 9th, 2020. So next, we'll discuss probably the simplest part of the option chain, bid ask. As I'm sure you can assume, bid ask is very easy. If you're trying to buy the contract, you are bidding. If you're trying to sell the contract, you are asking for a certain price. So let's just say I'm trying to buy the $282 call contract for this stock. I need to pay either $204 or above to buy this contract. And because someone that has the contract is trying to sell it for $207. Now the stock can move down a little bit and the price will waver with the stock. So if you want to wait, you can always be patient. You don't ever have to rush. What's there is going to move regardless. So the next part of it is the last price. The last price is the last price that the contract was sold for. So usually the last price is going to be either the bid, it's going to be the bid price, or it's going to be the mid price. Usually it's one of those. If it's not one of those, then the contract probably hasn't been selling much, and that's where volume comes in. Now volume, right up there with expiration date, just as important. If you don't have any volume on your contract that you're trying to buy, you probably shouldn't buy it. You should always look at the stock's volume and then look back to see the volume of each contract. Now, if the contracts at the money are like this, where it's 11,000 people buying, by the way, volume is per day, so every day volume resets. So that means 11,000 people on this day were trading this contract. So if there's 11,000 people on a contract that's at the money, then if I'm out here trying to purchase, I would need something like this, something like that, at least 1,000 volume on the contract for me to get into it. Because you never want to get into a contract that you can't get out of. You want to have somebody be waiting to buy, somebody willing to buy. If nobody's willing to buy your contract, you can't get out and you'll probably lose profit. So that's the parts of the option chains that we're discussing in this video. Catch you in the next one.